Hey everyone, I hope you're having a really good day. If you haven't subscribed to this channel, definitely do. There will be a lot more videos coming. I'm taking a little break from YouTube, but I'm back now and there will be more content coming out. Now, this video is dedicated to CHoCHs and flips and how do we use them and what are they, and ultimately there is a couple different ways of looking at it. So traditionally, the way I was taught was a CHoCH required some sort of liquidation. So CHoCH bottom and CHoCH top. That is the traditional way a CHoCH was taught, which is totally cool. And if this is what you do, that's totally fine. This is where I started out. So this implies that we grab liquidity here and then we disrespected the structure. Therefore, maybe demand took control. We can take an entry here and we can go that way, which is totally right, totally cool. That's for those that trade break of structure. Now, notice the distance we had to travel here to get the CHoCH. So I don't trade break of structure. I trade break of supply and demand. Like, yes, I use market structure to guide me and stuff, but here we're waiting for the structure point to go for the CHoCH to complete. Now, what if we had a supply here and the CHoCH actually completed here, and on the lower time frame, we actually even had an entry opportunity presents itself here, and we could have already had an entry long before this happened, and we either took some partials and broke even on the rest, or whatever the case may be, because this isn't always the case. Sometimes this is the case and it doesn't come back down here, and if you're already in an entry here, you have a position secured. You ran this high, you break even. Rather than waiting for this high to go, you're already in a trade break even. So break of supply and demand to me is so much more powerful than break structure. It's what I teach my students. It's what I prefer to do. It gets me into entries a lot quicker. So here we have EURUSD. We'll just rewind this a bit. We won't be doing bar replay on this. The sole purpose of this video is to show you how CHoCHs and flips work for me, the way I view it. So we're gonna assume this was like a 15-minute wick to the left somewhere. For those of you wondering, that's the 11th of February this month. I think this demand's a lot bigger. I don't want to make it big because it'll look something like this. If I pull the whole thing, we'll just make it ugly. But just know that that's what it is. It's a demand to the left, I believe, on the 15-minute or the half hour. So going back to my illustration, this is the traditional CHoCH. You run the lows, we liquidate. Liquidate meaning we run these stops, and the traditional CHoCH taught us that this is a CHoCH complete, which is totally right. It's not wrong. But here's what happens. So you have a supply here. You could say something in this wick caused the flip, which is not wrong. And you either find an entry in here, or you'll find an entry on the next flip zone if you don't catch that one, which is when this high is run. But what if there's a better way? What if instead of trading break of structure, we trade break of supply and demand? Well, where is the last supply here? The last supply is actually this wick here. Why is this zone the last supply? Well, it's quite simple. Only BFIs can create these wicks, so that is a supply zone 100%. The reason that's a supply is it forced prices to go down lower, and it ran the low. Now, if we said this was the last supply and we decided to use break supply and demand instead of break structure, which is the way I prefer trading, and a lot of people don't, and that's totally fine. You have to decide what you like. Notice how much quicker we get into a trade. So now we have a demand zone here. Cool. So what we're going to do is I'm going to sync this in layout, and we're going to sync that in layout. You also had another earlier flip zone actually from, this was actually another supply that was earlier than the other CHoCH. So even if you missed the first supply, you had another opportunity to enter on this giant candle. But we're going to come back to that, and we're going to talk about these flip zones. We're going to talk about these CHoCHs. For the time being, I'm just going to retract these two to keep the chart cleaner, but I will come back to those two and I will show you the difference. Any one of these methods will get you into a trade. There's no doubt about it. So now, where are we here? So, the flip zone happened right here. So this is your 10-minute supply. Let's actually just do one more thing here. Sync in layout, and we'll sync in layout, and we'll sync in layout. Cool. So I prefer using the 30-second and the 15-second for entries. If you use 1 minute, that's totally fine. You'll likely get a lot of the same entries. So here we have the supply. Here we have the demand that caused the flip. We ran the lows, we ran the highs. That's a CHoCH. This demand flipped this supply. That's a flip. So you have a CHoCH and a flip combined here. Now, once we tap deep into this demand, you have a trade opportunity. Now, there's two here. So this is a realistic scenario of what happens in the market. You ran the lows. The CHoCH bottom. And you have a CHoCH top. Cool. Now, from here, you would assume that the candle that caused the break would be this one here. So that would be my primary place of entry. So I would try an entry here. Alternatively, you could try the extreme. 3 out of 5 times it's what caused the supply to fail, and the other 2 out of 5 would be the extreme. So in this scenario here, your stop loss gets hit, and it's realistic. It happens. But more importantly, I want you to notice what else happens. We run the lows, and we run the highs. You have another CHoCH complete. Whereas traditionally, a lot of people would be waiting for this high to go, and they'd be like, okay, now I can get in a trade. We're already in the trade. So you just took a hit on this one. You took a loss here. No big deal. But more importantly than the loss is that we believe in our idea of this trade still going up. So we have a CHoCH and flip zone. And again, 3 out of 5 times it's what caused the flip. And the other 2 out of 5 it'll be the extreme. So now we get into an entry here. Now, look what happens here. So I like 2 pips. I've been most of my trades are all 2 pips, but check this out. So once we get to this point here, we break even. When price does come back down, it does not break you even. You stay in the trade. But you're in the trade already, and you are risk-free. Whereas so many of these guys would be waiting for this high to go, for this CHoCH to complete. You're already in the trade. a lot of guys that are waiting for this point to go, they probably enter in here, and you'll get tapped in here. And that's fantastic. That's totally cool. Not the way I trade, but that's a legit trade. But now let's look at the next scenario here. Let's hypothetically say you have this other flip zone. And I'm just going to show you, the reason I want to show you these is you're going to see how being in a trade early will basically allow you to quit trading earlier, and you're going to notice how maybe the next flip zone will fail. Maybe the next zone doesn't come back and tap you. So you take every opportunity that the market presents you with. So you have another flip zone here. This supply flipped it. Fantastic. Let's say you get this tap. You have a CHoCH here. You enter here. Depending on your stop loss size, you may or may not be taken out. Some of you might stay in. Some of you might be taken out. But look what happens next. If you're smart, you probably took some partials. It'll come back and break you even. Cool. This one here doesn't give you a CHoCH or entry opportunity whatsoever. There's too much momentum, and ultimately the trade is just gone, which is totally fine, unless you use this whole range to enter on, which a lot of you do, which is totally fine again. But now I want to show you the next thing. What else? So if we miss that trade, now what? So now we have another supply. And this big, so I'm just going to retract this. I'm going to retract this just to keep the charts a little cleaner. And here I'm going to sync that, and we are going to sync this wick. Now inside this wick is another demand zone, which we clearly tap into. Cool. Sync and layout. So you don't get an entry opportunity here, which is totally fine. Now the flip actually happens right here. You get your resting inducement here, which will likely get run. That's always there for a reason, which it does here. Now, depending how you trade, myself, I would see this, and I would see this wick above it. I would just market execute that. I'd be in that trade already. Done. No problem. And that's a, if we go on a lower time frame, that's a CHoCH. You can even see it on the 30-second, but just for the sake of this video, I'll show you guys how I would enter that. So as soon as this high is crossed right here, I just market execute that, put your stop right here. So that would be my entry. You know, I'll probably get in somewhere around here. Again, I'm in this trade with a CHoCH, and no worries if you missed it. You usually get another opportunity. And we'll go back to the 30-second. But here we get another CHoCH. We tap in again. The lows get run, the highs get run. That is a CHoCH. So once again, you can either market execute that, or you can put an order on this. Here you get tapped in. Whoops. What was that? That can't be right. Oh, that's right. Okay. So here you get another entry. Now, let's hypothetically say you miss this CHoCH and flip here. What are you going to do? Are you just going to sit the whole session out, miss the trade? What are your options? You could do all that, but there is a better way. rather than waiting for another chalk and flip, you just enter on the next flip zone. So here we have a supply zone. Here we have the area that broke the supply zone. Here you have another entry opportunity. Once again, here you have a supply zone. Here you have the demand that broke it. So you have another flip zone. Now, the further away you get from your higher time frame POI, the lower probability these become. But any of these are legit, and I would take them. Whereas once we get to flip zones up here, you know, I've lost my interest. Reason being is, you know, this is likely to become inducement and have a lower probability of winning money in that trade. Whereas if I enter on one of these, I'll break even right quick. You know, pay myself at 5R, leave a runner on, or even hard TP, whatever the case may be. If you're close to your impulse origin, you can do quite well. Now, if we let's just go to the 1 minute here. So, out of the opportunities we showed you today, I think you had to take, what was it? There was 2 losses, there was 5 wins, and you might have even broke even on 1 or 2. But the move itself is very true. As you could see, obviously, you know, no, you wouldn't be holding full volume because nobody should get that greedy. You should have a plan to pay yourself. You know, whether it's every 5R or you want to pay yourself every time a highs run, take something off the table, highs run, take something off the table, however you want to do it. There's many ways to do it, but I just wanted to show the difference between a chalk and a flip, and I think this is Friday's London session. I just thought it makes it made a really good example showing the difference between chalks and flips. Again, initially I was just going to make this for my group, but since this is literally the most commonly asked question in literally every Q&A, I decided to make this available for everyone to understand the difference and what it is. I hope this video helps some of you guys out. And again, if you haven't subscribed to this channel, definitely do, guys, and have a great rest of your Sunday.